What's up, guys? My name is Christian the Truth Jones. I'm here with my new partner, Mr. Ernest Gaines. He's gonna help me. Will be helping and partnering through my course, the True Success Series. Now, with that being said, I'll allow him to introduce himself.
Hey, how you guys doing? My name is Ernest. I'm one of the team members at a company called the ProfitRoom.com. So what we do at the Profit Room, we teach people and motivate them, inspire them to learn how to trade the different financial markets. It doesn't matter what market you trade, we can show you how to trade stocks, options, futures, forex, and we specialize in the technical aspect of trading. So that's one of the major things that we focus on at the Profit Room.
All right, you heard the man. Now, with that being said, let's get into it. So today, we're looking at TradingView.com, and we're going to be looking at Microsoft. And as you can see right now, for the next about 30 minutes or so, the market's going to be open. But with that being said, right here, you can see that Microsoft is about to do its earnings day. Earnings day is basically where they show all the meat and potatoes and what's be doing behind it, or what they're doing behind the scenes. Now, what would you say your take is on this company, Mr. Ernest?
So, well, I'm looking at Microsoft. I mean, it is a strong company. Currently, right now, you're currently looking at, what chart is this? We're looking at the daily chart?
Yeah.
Yeah, the daily chart. So it's been a lot of indecision in the market. But since this is Microsoft and a lot of people hold this company for a longer period of time, like a lot of institutions, a lot of retirement accounts, a lot of, like you mentioned before, 401ks, it is still holding a strong base. As you see, we call this consolidation. So even if you look back, if you scroll down just a little bit, just to bring it a little bit down, so you can see more of the chart. Yeah.
There we go.
Yep. So when you look at the chart, as you can look back from September going to October, it's been in a range. It looks like the bottom of the range is between 135 and the top of the range is between 142. So it's holding a stabilization level where it can possibly either do two things. It can break out to go higher or break out to go lower. But evidently it still seems to be currently right now in the channel. So based off of the technicals and the emotions of the market, we have to wait to see if we get a strong push. But on a longer time frame, it is a stronger stock.
Yeah, I remember back in 2017, Microsoft was about $80, between $80 and $90. So and they're at 130 right now. So if you had just bought stock from then, depending on how much you bought, you could have made a lot of money off of that.
Yeah, a whole lot of money. Yeah, because a lot of institutions, a lot of people come to these stocks as go-to stocks for safety, for comfort.
But yeah, you always want to find companies like Microsoft that are consistent, reliable, have a good track record, and just keep moving forward, even when they have their downs like right now.
Correct. Because one of these things that you can look at, what a lot of people are doing, if you notice in September, I don't know if you could pull the chart down just a little bit lower. If you scroll on the whole page, if you could bring the page down, just in general. See, because I see you got a lot of the fundamentals underneath it. There we go. Yep, just like that. So if you notice a lot that there's a lot of buyers coming in around 133 area, even if you go back to August. So there's a lot of buyers coming in there, correct. You go a little bit higher, right? 133, and it's coming up to a 141, 142 area. So this is called a range. This is a buying range. So you can anticipate, usually when the price comes back down to this 133 area, that there may be some buyers that'll come in, which is not a bad probability of getting in this particular company, because if you look at it, it always has come back up every time it hit that level of 133. But overall, like you just mentioned, from 2017, it was an $80 stock. Now it's up to $140, $135 area. So this tells a big story behind it, that no matter when it does come down, there's always some committed buyers that are ready to step in and purchase this Microsoft.
I see what you mean too. Because right here, when they were about 133,
Correct.
a lot of people and a lot of the volume, a lot of people started buying in because they saw that it was going to go up like this.
Correct.
Then a lot of people got out around then. Some people still bought it. But I see what you mean, because so yeah, about the same price right here, and right here. For a lot of you that don't trade out there and want to get into trading, I would say, as far as when you're looking at a stock or just looking at a company or corporation, more to say, look, one of the things besides just technicals and fundamentals, I would say look at the volume. Because as you can see here, the volume, just like technicals, has patterns from different traders.
Correct. And that's a lot. That's very important, like you said, when you mentioned the volume, because it's just like anything else. You don't want to get into a trade. It's like being in traffic, right? You would get stuck and there's not too many people moving, and you're just sitting there and all that time you have that capital and money invested and it's not doing anything. You want to find something that has that good volume in order to participate. And as you see here in Microsoft, you get a lot of volume in there, as you see when the selling comes and also when the buying comes as well. So you're not going to be stuck in traffic. You want to find a financial instrument that's going to move and continue to push, so you're just not sitting there with your funds and waiting forever to get paid. So if you look at something like this, even if you caught the trade at 133 or 134, we're looking on a daily chart. Like the truth mentioned, this is going from day to day. You probably only have to wait within a week to probably for the price to move up $5 or $6, which is a huge move, which
Definitely.
is a crazy huge move within the week. Some people invest in stocks and companies that only move about 50 cents in 2 weeks. So you want to find something like you just mentioned that has volume.
And I see what you mean as far as like it moving $5 to $6 with that being good, because a lot of people, especially if you don't trade, don't know what that means. Like $5 or $6, what am I going to do with that? But if you buy an option, see, an option is technically, I guess you could say, worth more than a stock, because it's like buying 100 shares when you instead of just buying one share when you buy a stock. So that $6 or $5 can make you $600 or $500.
Correct. Yeah, so like that's the same thing. If you bought, like you're saying, depending on your options, which you go into in the course, if you buy some options, you don't have to spend $133 per share. You got the opportunity to get in the same investment and maybe only invested about $150 to $200, but you're still able to almost double your money or get a minimum, maybe 30, 40, 50% on a move like that. Because a $5 move is huge in any type of stock. So that's the whole key behind it. If it's something that doesn't have movement, you are not going to make as much money.
And actually, that since that's been going on with the trading wars, as far as the streaming wars, not the trading wars.
Mm-hmm.
I would say for people that have a stock in Netflix and that just buy Netflix just because it seemed like a good company, which it was, but now it's, as you can see, it's starting to go down and lose a lot of its shares or market price. Because before, I know, not too long ago, I believe in May, last time I checked, they were at $364. They're at 276. If you had put a put on that,
Yeah, you made some amazing profits.
definitely.
So they just had earnings yesterday,
Yep.
and the thing about it, the company it spiked up ridiculously based off of the earnings, and the sellers came in and still faded it and brought it right back down. So that tells a lot about the internal of the company as well. So when you look at something like this, as you see on the chart, the last two candles was red, so they faded even more. So this stock went from about $285 to the next day it went up to close to $309, which is a significant move. But at the same time, it got slammed. It got slammed that same day, and they brought it back even lower. So, like you mentioned before, the streaming wars that's going on and things of that nature, even though it's still a good company, right? When you see moves and signs like this, there's no buyers committed to the trade. There's really no buyers committed. And like you mentioned, when we look at the red volume that came in, that's a lot of strong selling pressure. So
Yep.
we go all the way even back from to August, where you don't see a bar that red with that amount of volume until you saw yesterday, until yesterday's bar. So that means whoever came in this trade, and this is big money, this is big institutional money, hedge funds, big banks, they don't really want this stock at all. They don't want this company. That's why they sold it off for underlying reason.
That's why you see between about late July right here
Hmm.
to basically September, not many people were buying it or didn't have whole lot of volume because Netflix didn't have like one just really big loss from like 364 to 276. It was gradually and slowly moving down and down and down because they're
Correct.
coming out with streaming services like Amazon Prime Video, which has already been out, Disney Plus, Nickelodeon, Apple TV, Hulu, and a whole bunch of different streaming platforms. And a lot of people want to choose to have a variety of stuff instead of just Netflix and staying with one company. They have a variety of different things they can watch. So that's why a lot of people are trying to branch out and aren't just sticking with Netflix.
Correct. And the thing is, like, you're given that fundamental side behind it, which is correct. So as me looking from a technical, I'm looking at that fear from that red bar yesterday and that increased volume. So as a trader, you can almost anticipate which happened today, that it had what we call follow through. Because if you have massive selling pressure going on, other people react to that. Those who are holding that stock, even though the fundamentals are there, is saying, hey, that's a strong bar. That's a strong fear bar. And as you look at the past couple of days, you really don't see any bars that huge since probably in the August area. So every time there's been a sell-off, you see a major red bar. As a trader, you look at that, that's a sign that there could possibly be more selling. And what you looked at today, which is Friday, this last bar, they continue to sell it off even more. Because now, as traders, especially retail traders from our home, we can't make big moves like this. Only institutions can, only big banks. But when it trickles down, the retailers like us have to follow that lead. We
Definitely.
have to follow, and that's how we can capitalize off the movements both ways. If it's going up, like you said, with calls, or like now buying some puts if it was going down to make money, because we can't stop them from doing what they're going to do.
Yeah, especially I remember I was watching Netflix actually right at this time period in June.
Hmm.
And I was watching, I'm like, wait, what's happening? As I'm reading it, they slowly but surely, we're from here at 340 back up, topped out about 377 in
Hmm.
early July, and it was just a and it kept losing from there.
Correct. Yeah,
So
that was a huge earnings gap that they
definitely,
dropped it down because even though buyers are push it up, like those fundamentals came back that the company wasn't as hot as they thought. And since then, it's just started been going downhill. And plus, like you mentioned, the trade wars and things of that nature. I mean, streaming wars, they started to beat it up even more. So even uh, the corporate individuals didn't like their numbers. Then you put on top of that the fight that's going on, it starts to weaken and weaken and weaken the company. So as we see here, it came all the way down to the 250s, where a lot of people may have thought that's a buying area, and it probably was, but we see that as only short-lived. Even though that's a good move up to 310, but this thing should have continued to go higher. So right now, we're still in a situation where it's still a weak stock currently right now, because whenever you see something like this that's very, very red, it's not a good sign at all. It's not a good sign because this thing can come all the way back down to 254 if the institutions allow it to.
yeah, like right here in their last one, that's about what was that? It was called a full. I forget. I always forget the names of them sometimes, but like a full where the bar is almost completely red. That's a very
Yeah,
strong indication of fear.
correct. Yeah, we call that a engulfing bar.
Dolphin, that's what it was. And that was
Engulfing. So
like
the
full.
reason why we call that an engulfing, because that one bar just engulfed them last couple of days. You see that them little green, the three little greens and a red, correct. So that bar right there just wiped out those 4 days. It just dominated that bar right there. And that's power. That takes a lot of power in order to do that. So when you see a sign like that, that's not a sign to buy at all,
Nope.
because that's a lot of strength. So if you go to the left, you see the green bar. Let's go to the left a little bit. See, that was a bullish engulfing. See how it engulfed the rest of those other small little candles? That's a strong buy signal right there, because it engulfed the rest of those little small candles. So that means that big buyers came in. And what it did, it had some follow through and pushed higher. So when you see stuff like that, greed and fear, you got to learn how to react to that and learn how to react to that.
Because as I can see here, about at the bottom of it, about it was about 266, 265, and then it topped out for that day about 280. So that would be a great call to make. Which way the best see about
Correct.
1,500, 1,400, depending on where you bought it at.
Yep. And the next day, it started to push even higher. Even though it went sideways a little bit, it still pushed higher up into the big earnings play. So that's a sign, though, even that bar, that is committed. Even though the next bar wasn't super green or big like that one, it just showed you that that was a good direction
Definitely.
for where the price can possibly go. Where the price can possibly go. And that's what we're looking for, the right direction.
And what I can't move that, can I? But and then to about let's see. So actually yesterday they were at 293, and they got up to about 208, 203. Yeah, I mean 308, 309, 310, around that range.
Mm-hmm.
And then on one day,
Yep.
that's the power of the stock market, guys. I'm telling you, you got to get into this.
Yeah, you can make a lot of money off of that.
Yeah,
Make a lot of money off of that. There's a lot of people even with options. Even if you didn't have, you could have made at least, even if you had one or two contracts, you could have made maybe like 600 to 700% in just one of those moves. 600, 700, 800% easy in a move like that, if you caught it in the right direction. If you caught it in the right direction, and you
that's
didn't
why.
have to probably leverage.
That's why you have traders like me and Mr. Ernest and a whole bunch of different traders trying to get you guys to invest in yourselves to be able to learn this, where you can make a quick 1,400 in a day, make another 3,000 in a day, and be able to make a from like seven, like you said, 7,000, 8,000% in a day. Because you saw how quick they went for about 305, 308, back down to
Hmm.
276, like that.
And it's not rocket science.
Nope.
It takes education, and it just takes study. Like the we try to explain it as simple as possible. Like it would, I try to use the term reasonableness and common sense. So that's why they have a chart. And is when you see red, we know that, like a stop sign, right? It's fear. That means be aware of what's going on, right? That shows that there's danger. And when you look at green, what green means go. Green means buy. Green gives you an opportunity, right? So we are visual people. And at the same time, we have to react to what we see. And once you train your eyes and you train yourself on knowing how to anticipate movements, that's how you can be able to, with the right risk management, pull money out of the stock market on a consistent basis by doing it, and not putting yourself in danger by getting in trades that you shouldn't be in and losing unnecessary money. Like we all take losses when we trade and invest, but the difference between those who are educated and those who are not, those who are educated take controlled losses. And what I mean by controlled losses is that you automatically ahead of time can know what you're willing to risk in order to get that reward. Where those who aren't educated, they just get in a trade based off of a thought process or what somebody says. This is a good company, things of that nature. They don't have a plan. They don't have any type of action. They're not strategic on what they do. Then when they lose money, they look to blame someone else. They blame the stock market. They blame everything, but they never had that controlled way of getting into the market, that strategic way of getting into market. And that's the key in order to be a successful trader or investor.
Yeah. Because I remember someone had asked me before, what's the difference from gambling? And I told them the difference is gambling, you're literally putting up your money up and wishing. With this, especially with technicals and fundamentals, the two types of trading, you'll be able to make strategic calls and different indicators of fear and greed and be able to make a decision like that.
Correct.
And,
I call it, because as a day trader, I trade every day. We call it the 5-second rule too,
yep.
because you have to be able to react, right? And not everybody's going to be a day trader. You can do this and not have to watch the market every single day. I like to call it the microwave trades, right? You look for a stock, you look for a company, like you said, you do your research, your fundamentals, your technicals. Just like you put something in the microwave, you hit start and you walk away, right? You're either
Yep.
going to get there and it's cooked, or you're going to get there and it's not cooked, right? So
Yes.
either way is going to work out. But you have that risk management ahead of time. And that's called reacting to the trade, not overly thinking. And how you react is by trusting what you see and not what you think. And that's key important. Like Truth you just brought out. Like people love Netflix. Everybody has Netflix, right? But you can visually see on that chart that people didn't love Netflix those days, the past 2 days. But the average person wouldn't even know that. They just think it's a great company. But you already gave the education on the fundamental side, and I was showing them something on the technical side. So that's the reason behind it. Why would you want to invest in that company right now? Nothing against it, but that's the proven facts at the point. And that's where the education comes
And I remember I made a video back in May.
in. Mm-hmm.
And I was talking about the trade wars, how they were, what was I saying? What did I say? They were what's it called? Basically doing something against Apple. I forgot what I said exactly, but they were doing some against Apple with them making their phones, like physically making the phone.
Correct.
And then in China, and Chinese labor is cheap. And I was saying, if they quit making the phones for China and decide to go with local companies and more regional companies instead of Apple and big companies in another country, then Apple would have to find a third party maker, and that would also bring up the phone's prices because it's also costing them more money than actually make the phone.
Correct. And see,
That's,
that's where the economics comes in with
yep,
trading too, the trade wars and things of that nature. And you're right, because now that situation is going to devalue some of the company because you have to pass on that price to the consumer. And
yep,
the fact that you got to pass it on to the consumer, the average person is not going to be happy with the stock or not happy with the company, and they may move out of the company. And like you said, the price is going to start to go down.
yeah. Because what a lot of companies will try to do if they have a situation like that is where they're, as in order to keep up the same profits and keep the company running at where it is and even try to upgrade it, of course, it's going to cost them, and it's costing them more money. They get to upgrade or increase the prices for the consumer, so the consumer has to pay so the company can keep doing what it's doing.
Correct.
So you pay more so they can keep doing what they're doing. And that's why I said right here, they're about 214, 215,
Mm-hmm.
give or take. And that was back in May. And that's when that was going on. That's why a lot of things I say about the trade wars and about things that happen globally with economics to pay attention and not just, oh, that's happening in another country. It doesn't, I don't care about that. When really it affects you indirectly and it can affect you
Correct.
directly.
And that's the thing. Yeah, like I tell people all the time, especially if you want to get involved with this, we have so many things on our phones, so many things on TV. You have to
Yep.
stay up to date, especially like there's like the CMC, CNBC, there's Bloomberg, there's so many news. And the fact is that we have the time, we have the resources in order to do it. I mean, many of us have time to watch different series on TV shows. We talk about it left and right. But if you're really trying to, make some money and understand these economics, you have to watch what's going on. And it could
Definitely.
be a simple alert on your phone from Bloomberg or CNBC or one of these other news stations that can just let you know, hey, this is going on today, that's going on today. And many of us just look at it like you just mentioned. It doesn't affect me. It really doesn't affect me. But at the end of the day, it does affect me. It
Yep.
does. It does affect you. You don't want to have no issues or anything like that at all.
Yes, sir. And I remember when I was saying that they were about, like I said, they were about 210, give or take.
Okay.
And as soon as that happened, they were going down, and that's about an engulfing almost. Harami, they're going down, and they bottomed at about 173. That's a huge margin.
Correct. Correct.
And
Huge.
this is early June, and as you can see from here, they started going back up,
Mm-hmm.
and they topped out at 216 and started going back down again. And about
Correct.
yeah, about August, late July.
And that's the thing. A lot of that stuff going back and forth, like you mentioned,
Yep.
the tariff wars, back and forth, back and forth. And a lot of people don't realize how much stuff we get from China, just in general, and how many resources that we use from them as well, or they use from us. So it's always like a tug of war and a pull back and forth, back and forth, back and forth. And a lot of people look at a market like this and say, I don't know how you can make money in a market like this. I don't know how you can make money, but these markets right here, you can make so much more money because you can understand what's actually going on. You could take that news, mix it with that technicals,
Yep.
and be able to properly position yourself in order to get in that trade and make some money. So that's one of the things that, you know, is very, very great about even participating in the financial markets. Like, everything is not going to be 100%, but the more you get active with it, the more you start to understand it, it clicks a little bit better. Then you say, you know what? I'm engaged now. I'm getting educated now. Then you start telling your other family members about it. And some family members might pick up a little bit more than you pick up. And that's how you start to build generational wealth, by
Yep.
participating in these markets that's open to all of us,
That's exactly how it
all of
works.
us to trade.
You'd be
Yeah,
making millions at home. People would never know, never have to leave your house. All you need is a computer, some Wi-Fi, and a brokerage account.
that's it. That's it.
Yeah, and I can see about right here, a lot of people, there was a lot of volume here when they started having this big dip.
Correct. And that's where we talked about before, how the fear comes into the market. That's all those people that came in there, and before you know it, that one bar, started the trend for more people to come in and be able to sell off. Because remember, in order to do a big bar like that in volume, me and you can't do that.
Nope.
Me and you can't do that. There had to be somebody else that came in there that was able to push that. And what happens, just like we just looked a minute ago at Netflix, people want to follow up. If you start hearing somebody running or seeing a whole crowd of people run, you're not going to just stand and look back. Most likely, you're going to run with them because you understand that they're running from something that's fearful.
Yeah.
So that's the same thing when you look right here in the stock market. These people are running away from the stock. They're taking their money out of the stock. So you're going to do the same thing in order not to put yourself in a situation to get hurt like that.
Yeah. I like to call this, I guess you could say, a trend. Well, yeah.
Correct. It is definitely a trend. It's a major sell-off as well.
And then, as you can see from, they were, let's see, about 216, came down from, what day is it? So they were about 216 in July 1st, came all the way down to 193 on August 5th. That's a couple of days. That put right there, that put
Yeah,
is insane. I'm telling you,
that's crazy. That's crazy.
you got to get into this market.
That's a huge move.
And that's just with one contract, let alone if you have some real money already.
Mm-hmm.
Ooh-wee.
And it's fast too.
Yep.
We talking days, not weeks or months.
That was about 5 days right there.
Yep, that whole week you could have got in a nice put, and in order dropping down. So, like you might have mentioned before, those puts give you the opportunities to make money when the stock market falls as well. So I like to explain to people, just like how when you buy something and the price goes up and you make money, when the market goes down, you can make money at the same time. You're just getting a spread that's in between. So if I bought something for $10 and it went up to $20, I made a $10 spread in between. So that's the same thing. If you could buy a put and the stock price falls down, that same price goes up. So you still get the $10 spread in between.
Yes,
So
sir.
that's the beauty behind learning. And a lot of people don't understand that. That's where we provide education so that you can make money either way. And that's one thing to always remember. There's two sides to the market. Just like when you go to the mall or you go to the store, there's always a buyer and there's always a seller.
Yes.
no matter what. That's how the world works. So just because a stock looks good, you have to be buying from somebody because they sold it to you, right? And once you sell your stock to somebody, somebody must be buying it. So don't limit yourself to just one side of the market. You got to learn how to be able to trade both sides when the market's not doing good and when the market's doing great.
Definitely. That's why you gotta not just stick with stocks, gotta go to options. If you really want to make money in the stock market, you gotta do options. Period.
Correct. And options is a great way to get into the market with low capital and major returns. Low capital, you can make some amazing returns.
And then this one's just beautiful as far as cost. So you went from this amazing put from about 216 to 193, and then they had a call and an engulfing from that 193 to 208.
Correct. Yep. Made another trend to start to go even higher.
Yes, sir. And they got another one right here.
Yep. It came back down. And see, in these times, all you have to do is be able to try to time it the best way based off of the technicals. And you don't have to be in these moves that long. Once you make your money, you depending on your percentage that you're trying to make, you get out the trade. You get out the trade and you do it all over again. You do it all over again. And that's what we try to teach our students is the right way to enter a trade and the proper way to exit as well.
Definitely. And and a lot of people made all that money in about a week. That happened in about a week.
Correct. A 5 day each of those moves is about 4 or 5 days.
Yep. Because this was July 31st, August 1st, 5th, 13th. That's
Yep,
not
easy.
a long time.
That's not a long time at all.
But with stocks, you gotta wait months or years or however long. It takes forever to get your money. But this is about 8 days. Made way more than you would on just buying a whole bunch of stocks and waiting, depending on what company you invest in.
Correct. Because you want something that you have movement in. That you have movement in. Like you said before, like this is about the third chart we looked at, and we can just tell by looking at the candles and knowing some fundamentals behind it, like you mentioned with the tariffs and looking at the charts. So you put the combination together and you have a solid strategy in order to make some money. And it's not rocket science. Like
No.
explaining this to you right now, you should be able to see it like, okay, it makes sense. You know, this is a reasonable way of understanding it. You see the red for emphasis, that's fear, that's selling, that's people running away from the company. And you see the green, that's greed, that's go, that's people going towards the company. Let me buy some more. And once you mix that with the fundamentals and the proper risk management, you become now a trader and an investor. And you just
Yep.
keep growing from there. Keep growing from there.
Yeah, it's really as simple as that. This, like you said, this stuff ain't rocket science. It's really that easy. You can really make real serious cash and capital off of this. And that's how you'll be able to create generational wealth. That's how you'll be able to create financial freedom from a computer or phone, some Wi-Fi, and a brokerage account.
Correct. And the thing behind it, what turns a lot of people off, sometimes society makes it seem so difficult for you to
For
do it.
real.
So when you watch TV and you look at the news and CNBC, you see all the tickers going around the bottom of the screen. You see the charts moving up and down. It's a lot for your brain to take in all at once. So usually we back off because of this is just too much. Like it's just too much. But the thing is, once what we try to do is simplify it to the point where you can understand it like we're doing now. This is the same type of teaching style that you can get from learning what we have to offer, so you can feel comfortable and be able to push out all that noise of the charts jumping up and down, the bells going off, and the things moving at the bottom of your screen, things of that nature, and be able to have something that's very clean, very neat, and very relaxing, and be
Yep.
able to like, okay, I could do this. I could do this without having all the unnecessary noise that we're normally used to seeing on TV, which does deter a lot of people.
Definitely.
It does deter a lot of people.
And then a lot of people, even when they get a little bit interested, they'll have to stop out to go to sites like YouTube or just looking it up on Google. And I'm gonna tell you from firsthand experience that trying to look it up on YouTube and learn it never works.
Mm-hmm.
It's not gonna work. I remember I was watching a video about options and someone was explaining it, and this is after I learned it. I didn't even know what he was talking about, and I already know this. So imagine the people that have no clue about stocks, options, what's it called, calls, spreads, cover calls.
Yeah, and the thing is, because when people talk about it, it's not necessarily they can teach about it.
Yes.
You know, and there's so many strategies out here. Is hundreds and hundreds of strategies, and sometimes those strategies don't fit your personality, or sometimes you're not even ready for that level yet, because you have to start. You know, you got to start before you make it to that level of even understanding. And that's what can happen when you go on a YouTube University, because it's going to give you suggestions, it's going to give you suggestions, it's going to give you suggestions, and before you know it, you're listening to so many people's opinions, your mindset is already clouded, and that can deter you even more versus having somebody that can explain to you and give you some structure on behind what you need to know,
Yep.
what you actually need to know. Because there's so many things that you could learn about trading and investing, but what's going to work for you in this current situation? What's going to help you get to fast track onto putting money in the market and seeing some profits, right? Because you can always advance, but you need to start somewhere in order to begin. And that's what our goal is in doing it like that. So you're not all over the place and being distracted. A simple strategic way of getting in the market, learning how to find the right options to trade, learning how to look at a stock chart based off of technical analysis, and having the right risk management in order to be able to pull out some profits of the market.
Yep. And it's really just like you said, just finding where you need to start. I would say first learn stocks, then get into options, then get into cover calls and more advanced trading.
Mm-hmm.
Because therefore you'll have that experience, at least know a little bit and begin to understand more advanced techniques like cover calls, iron condors, butterflies, and all those.
Correct. And that's the thing, like you mentioned before, trading is just like anything else. It's like learning how to learn in another language,
Yeah.
right? You got to learn how to say hello, goodbye, what to eat, in whatever language first. You can't be saying a whole sentence and going back and forth, not right away. It's just like a muscle. Like the same thing. You're going to the gym, doing your thing. You're not going to go there and start bench pressing a whole bunch of weight. You got to work your way up, because if you don't, you're going to end up getting hurt.
Yeah.
And a lot of people, they start off and they get hurt. So you don't want to be put in that situation.
All right. With that being said, I'd like to thank my man, Mr. Ernest, for being on this webinar with me. Make sure you go to the True Success Series. Follow me at the True 2024 and follow him at the Profit Room.
Correct.
And invest in yourself, learn this knowledge, create generational wealth, and become financially free from a phone, computer, some Wi-Fi, and a brokerage account. It's really that easy.